Welcome to a new episode of our Global Insight series. Today, we spotlight a powerful shift that's catching fire on Wall Street, a renewed conviction that emerging markets are back, and this time, it may just stick.
For over a decade, emerging markets have sat in the shadows while US stocks soared to historic highs. But that tide may finally be turning. Wall Street heavyweights, Morgan Stanley, AQR, Bank of America, Franklin Templeton, are all aligning behind the same thesis: EM equities are set to outperform the US. Why now? Well, it starts with the dollar. After a 4-month slide, the greenback is wobbling, and that's fuel for EM. A weaker dollar historically accounts for up to 1/3 of EM equity returns. This year, the MSCI EM Currency Index hit a record. The S&P 500? Flat. EM equities? Up 10%. But this isn't just about currency mechanics. It's about fundamentals and risk appetite recalibrating. The US is staring down ballooning debt, a downgraded credit rating, and renewed tariff battles. Meanwhile, many emerging nations boast faster GDP growth, lower debt-to-GDP ratios, and more policy headroom. Just look at countries like India, Turkey, the Philippines, and South Korea. They've moved decisively on rates, while the Fed remains cautious, boxed in by inflation risk. Investors are no longer just hunting for yield. They're searching for structural resilience. And sectors matter too. The smart money is going local, into EM banks, healthcare, electrification, even defense, areas less sensitive to global trade friction and more tied to rising domestic demand. Yes, EM comes with risk. Politics, volatility, and patchy earnings remain real concerns. China's equity story still underdelivers, and some markets carry high transaction costs. But even skeptics are beginning to acknowledge that the old playbook, flee to the US when things get rough, might be outdated. As Franklin Templeton's Christy Tan put it bluntly, US exceptionalism is over for the time being, and capital is beginning to respond. US-listed ETFs targeting EM pulled in nearly $2 billion in the first week of May, double the week before. So, is this a fleeting rebound or the beginning of something bigger? That depends. But one thing's clear. The EM bull case is no longer fringe thinking. It's becoming consensus. And if the dollar keeps slipping, the EM story may just become the defining trade of the next decade. Thanks for tuning in. Don't miss our next Global Insight Series deep dive. Hit subscribe and stay ahead of the market. See you next time.